This video is going to be me sort of pondering over my thoughts in terms of Meta stock, also known as Facebook, and essentially reflecting on why I didn't end up buying the company at a valuation or a stock price of $80 a share, which was a now ridiculously low 10 times PE ratio, and sort of reflecting on some of the mistakes I've made. I know Warren Buffett has countless times said that his biggest mistakes weren't from the losses he took, but rather from the opportunities he missed. And this is one for myself. I mean, $80 a share versus $500 a share now. I mean, that's a pretty sizable gain in the meantime. And just to set the context, during this period, Facebook was hated and unloved, and there was some valid reasons behind it, in my opinion, and some not so valid reasons, which I'll look into now. So I think there was a catalyst of three sort of major factors at play. The first thing is Apple had fallen out with Facebook during this period, and they were on a bit of a rocky relationship. And what I mean by this is Facebook had attempted to sort of dispute some of the charges that Apple had on terms of their App Store and their sort of 40% cut they take from the App Store and all revenues essentially collected. So that's the first thing. The second thing being that Facebook had been spending ridiculous amounts, like tens of billions of dollars per year, on essentially what they called the metaverse, which was massively eating up into their net income essentially. It was eating up into the net income, and investors were seeing no essential real results. Yes, Oculus was being scaled and developed, but outside of that, there wasn't too much going on, and there wasn't too much of a return, and not something where investors saw the long term really being in terms of the value there. So that was the second thing. And the third thing, which was I'd say arguably the most important thing, was the TikTok element. So TikTok had come into this market in the span of 2-3 years and sort of just gone in and just destroyed it in terms of market share. They just absolutely crushed it. And as a result, people were concerned about the longevity of Facebook and its brands. Is Facebook dying out? Is it just an audience for sort of older people now? And that sort of concern related to the brand. So I'll just sort of go through each point and sort of dissect it and sort of give my take and opinion on it and whatnot. So the first thing being is the relationship with Apple and Facebook. I think this is one that wasn't too much of a concern for me personally, because yes, they blocked them from using certain analytics, but to be honest, the amount of data Facebook has, it wasn't too much of an issue. And they've had similar conflicts in the past where they've then managed to sort of find another way to monetize, and it shouldn't have been too much of an issue. Second thing, so that's the first thing out of the way. I wasn't too concerned with that element. The second reason behind it was the first, which was the Apple and Facebook clash. The second thing was the ridiculous spending. Now, if you had known this, actually, if you paid as close attention to the company, which I hadn't as much at the time, which I really regret now, is that you would have noticed that actually a lot of these big tech companies were starting to do massive job layoffs. They're starting to sort of cut back on their costs in 2023 and sort of make the business more lean. Facebook had initially been run as call it a country club. A lot of people described it as, and it sort of started trimming off the fat. It started, becoming a lot more lean. And as soon as, even if I hadn't bought at $80 a share, even if you just bought like $120 a share when they released and announced the fact they were doing job cuts, you could have signaled that there was that transition and that spending would have decreased. But to be honest, even with the ridiculous spending, the company was still ridiculously profitable. And from a price to earnings perspective, it was not a concern. I mean, this P ratio at the time was like, it was double digits. It was like 10, 15 times earnings, which is unheard of for a company like Meta, apologies. So unheard of price to earnings for such a company like Meta. So even if it was slightly less unprofitable, it still was trading at a very low valuation. So you didn't even need to factor the second point in because it was priced in. It was such a low price that you would have still had great value regardless of that when you have a company that's growing, 5-10% on a consistent basis, very strong moat. The PE ratio of that, the fair value of that could easily be in the the 30s, the 25. It could easily double up in terms of a price to earnings perspective. And now the last sort of the third point was in relation to how is TikTok doing, and how is it going to destroy its sort of market cap, its sort of competition, its standing. Well, the first thing I want to say is that if you look back on Meta and on Facebook and sort of see its history, you'll notice that there's been various competitors that have come in, and every single time Zuckerberg and the team have fantastically operated in shutting down these sort of competitors. So what I mean is not quite literally shutting them down, but rather that Snapchat came in, they sort of copied their features and cloned them and used them for their own case. If you've seen Monish talk about cloning, if you've not, I'd highly recommend it. You can learn a lot there. But he's essentially saying that businesses that can clone can do very well. That's their unique advantage, and it helps them survive. That's something that Meta did right there. Instagram came about, boom, in 2 years they bought it out at what seemed like a ridiculous valuation of $1 billion, $2 billion. But I mean, now if you look back at it, it was an absolute steal, considering the business easily goes for a few $100 billion if it were to be sold off today. That's the second thing. And so not only is Meta very good at cloning their features, what TikTok has, and they can do short form content, they also have had these trials that you can look back at and say, well, actually they perform really well even with this tough competition they've had in these areas. And to be honest, even if TikTok still remains and does really well, there's room for that in this market. TikTok is huge, but the amount of room in this advertising market is insane. Meta is such a big company with such large grasp that at this valuation, it should have been a no-brainer. And I think what really caught me back, looking back on my rationale, which I'd wrote down, was the fact that I was really unsure as to how that TikTok aspect would take place and how it would perform in the long term. Essentially, that was sort of my concern with this one. Although looking back, I do feel like I was too fearful of the risk and sort of underappreciated the valuation it's at now. And that's something where I could have done better. I think that's sort of me looking back on the history and reflecting, which is good to do, and sort of just say, well, actually, this is something I've overappreciated, and next time let's just take a step back and sort of relax. I know it's easier to say it now. It's been 2 years since the whole ordeal's happened or so. But if I can do that next time a certain meta situation or another situation like that occurs, I'll be there to capitalize on it as a result. Of course, this isn't advice, but it's just me looking back. It's just for educational and entertainment purposes. Hope you enjoyed. Thanks for listening.